All right, today we're putting on our detective hats and diving deep into a stock that's in a spectacular nosedive. We've got the technical report right here. Think of it as our evidence file, and we're going to piece together all the clues to figure out what on earth is going on. Let's get into it.
So this is the number that started it all. In just one day, the stock YAI dropped almost 51%. I mean, that is just catastrophic. It's more than just a bad day on the market. And our job today is to figure out what the technical report tells us about why this happened.
So yeah, that's the big question, right? What in the world just happened? We're going to use this technical analysis as our guide, piece by piece, to build the story of this crash and really get inside the heads of the analysts to see what they see when they look at these charts.
Okay, let's start at the scene of the crime, the price action itself. This first part is all about that insane one-day plunge.
Now, here's what's so interesting. Look at the day before the crash. On October 22nd, the price more than doubled. It shot up from about 8 cents to nearly 19. You might have thought, hey, this is a huge rebound. But then, boom, the very next day, that 51% drop completely wiped out all of those gains, and then some. It was a brutal confirmation that the real trend was sharply down.
That one day was obviously incredibly dramatic. But you have to ask, was it really a bolt from the blue? To figure that out, we've got to zoom out and look at the bigger picture.
And wow, this really puts it all into perspective, doesn't it? The stock is trading at just 9 cents, but its average price over the last 200 days is $1.37. When a stock is trading this far below its long-term average, that is a massive red flag. The report is crystal clear on this. This isn't just a little dip, it's a deep, entrenched bearish trend.
So the key takeaway here is that this collapse didn't just happen out of nowhere. The stock was already down a staggering 96% from its recent highs. It's basically scraping the bottom, right near its lowest price in a whole year. And you see it's trading below every major technical average. And that high volume, well, that just tells you that a lot of people are running for the exits all at once. This is a severe, sustained downtrend.
Okay, so we've established the trend is, well, it's bad. So now let's do what the analysts do and check the stock's vital signs. We're going to use a couple of key technical indicators from this report to see just how healthy, or more likely unhealthy, this patient really is.
First up is something called the ADX. The easiest way to think about it is like a speedometer for the trend. It doesn't care if the price is going up or down. All it tells you is how strong that trend is. And the magic number is 25. Anything over that suggests you're looking at a pretty powerful, established trend.
So what's YAI's ADX score? It's 36.13. That is a very strong reading. What this number confirms is that the downtrend we're seeing isn't just some weak, flimsy move. No, this is a freight train moving downhill, and it has some serious force behind it. Next up, let's check the RSI, or the Relative Strength Index. I like to call this the exhaustion meter. It basically measures if the selling or buying is getting overdone. When it drops below 30, that's a signal that the stock is oversold, meaning there has been an absolutely extreme amount of selling.
And YAI's RSI is 2755. It is deep in that oversold territory. Now, your first thought might be, great, it's been sold way too much, it has to bounce back now, right? Well, not so fast. The report is very clear here. In a strong downtrend like this one, a stock can stay oversold for a very, very long time. It's a sign of absolute capitulation, not necessarily a sign of a bounce. Think of it less as a buy signal and more as a warning flare. Okay, so we've diagnosed the problem, the trend is down, it's strong, and the selling has been extreme. So now we move from diagnosis to prognosis. How do analysts use all this data to map out what could happen next?
The report boils it all down to 3 possible scenarios, and it even puts probabilities on them. And as you can see, the outlook is, well, it's pretty grim. There's a 70% chance that the price just keeps on falling. Now compare that to the tiny little 10% slice for a bullish reversal. The data is pointing very clearly in one direction.
And here are the specific price levels for each of those scenarios. For that bearish case to continue, the price has to fall below that 8.8 cent level. But for things to turn bullish, it would take a truly heroic effort to break above resistance at nearly 13 cents. These are the key battle lines that the analysts are watching right now.
All right, so after looking at the price, the trend, the vitals, and all the possible futures, what's the final takeaway here? Let's get to the analyst's verdict.
And this really sums up everything we've just seen. The evidence is overwhelming. The downtrend is real, it's powerful, and it's confirmed. And that oversold reading from the RSI, it's much more likely to be a trap than an opportunity. All the momentum, all the risk, it's all pointing in one direction, down.
And you know, it doesn't get much clearer or more direct than this. This is the single biggest piece of advice from the report. It's a blunt warning: avoid buying this stock. And the condition for even reconsidering: don't even think about it until that exhaustion meter, the RSI, can climb back above 40 and show some real sign of life.
Which leaves us with the ultimate question that every trader faces in a situation like this. After a 96% collapse and a 51% drop in a single day, you have to wonder, is this finally the bottom? Or, as this technical report strongly suggests, is this just a brief pause before the next painful leg down? The data gives us a probability, but only time will tell the end of this story.